Hello traders, Gary Wagner here, just before 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, 3rd day of December 2019, and this is the Daily Report for Gold and Silver. A single set of statements made by President Trump today shook the financial markets to its core, taking the Dow Jones Industrial Average, in fact, all U.S. equities dramatically lower, and gold and silver dramatically higher. In essence, what he said is that he is in no hurry to make a trade deal and would prefer to make this deal after the 2020 election. That changed all of the parameters in terms of how market participants had been looking at the current negotiations and how quickly they thought we would see some sort of resolution. Obviously, that is pushed out in time at this point. Let's take a look at current pricing. Traders, the precious metals across the board did move higher today, with the Dow Jones Industrial losing about a full percentage point. The reciprocal came in terms of gold's move higher, which was about 1%. As you can see, we're looking at gold futures. This is the February contract at 1483.30, up 14.10 on the day. We did send out a special trade alert, and traders taking that call got in roughly at 1484.60, just about $1 from this price point. We also mentioned that we suggested you reserve part of your capital so that if we do see a dip, we can add to that position. However, we did not see a dip since we got into the market, and the market has stayed pretty steady at this particular price point. On today's show, I want to cover what prompted the trade alert, why we put our stop where we did, and what our upside target is, and various levels of resistance. Let's go ahead and take a look at our studies. The first chart that we are going to look at is a simple daily candlestick chart with the 50 and 100-day moving average, along with a Fibonacci retracement. And the Fib retracement that we are looking at is of wave 3, as it traded from about 1270 up to 1565. After the highs were achieved, the market did enter a correction and traded to a series of bottoms, the first of which came in right here, and then the second occurrence was right here. The first occurrence took the market to a low of approximately 1449 here, and then as it went higher, it definitely had a false breakout because it quickly eroded and then traded to the second of these two bottoms. What is different is the fact that it broke above the trading range that gold had been so caught up in. And that is one of the primary reasons that we issued a buy signal. If we draw a line right here, what we can see is a couple of things. The first of which is solid support right in this area. We can also see that when it broke through this area, it broke rather hard, and it did not have the ability to take that area out, and in fact was resistance up until today. Today's market, in fact, closed above that, and that to me is extremely significant. What you see down below is the actual trade alert that we sent out. Market was trading at roughly 1484.60, and we also suggested placing a stop at 1459.13. Now, in terms of where we put our stop at, the rationale behind that was to place our stop just below yesterday's low, which is these lows right in here, which come in roughly at 1460, and that is why we placed the stop just below at 1459.13. Now, in terms of resistance levels, obviously the first level that we're going to have to take out, and I don't believe that that will be too difficult, is this 150-day moving average. The second real level that will counter is going to be just below 1500, at 1497, and that is the 23% retracement point. I believe that once we break above 1500, we really don't have any real resistance till about 1540, and that is my upside target for this particular trade. First, of course, we have to make it above 1500, but if we do, we'll have some minor resistance at 1520 and then again at 1540. These are the two areas that I'm looking at, and I think that that is quite achievable. Another component of the trade alert we sent out this morning was to reserve some capital in case we had the market move to about 1480 or 81. And we never saw the market actually dip that low, and so we're still sitting with a little bit of capital reserved. If it does come down, we do want to add a position at 1480. If it continues to move to the upside, we would look to add to that position once we cleared the 50 and 100-day moving average. And traders, lastly, I do want to take a look at this daily chart. This contains our Elliott wave count, and my sense is that we might have finally achieved liftoff in terms of the conclusion of a corrective wave 4, and we're now in wave 5. And that was one of the primary reasons that I was waiting for some kind of a breakout to actually enter the market from the long side. Because if we are truly in a fifth wave, we have quite a ways to go, and in fact should end up with a new high either for this year or the first quarter of next year. In other words, taking out 1565. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.